Hello and welcome to the Eide Tax News and Views podcast, exploring current tax topics of interest and providing tax insight to help you make an informed decision. During this session, you will learn more about research and development tax incentives with Joe Stoddard, a National Tax Office partner and leader of our R&D tax credit practice. Joe, I know you've had a busy few months helping clients take advantage of the R&D tax credit. Can you tell us a little bit more about the R&D credit and what activities might qualify?
Absolutely. So to start off, the Congress has implemented incentives for research and development, or R&D activities, to encourage companies to do their R&D in the U.S. Part of this is to help promote innovation and also to help these U.S. companies remain competitive on the global landscape. In terms of the types of activities that qualify for this credit, one thing that I always like to say is that the types of activities is fairly broad. People hear the term research and development or R&D, and in their mind, they've got a person with a white lab coat and test beakers doing R&D, and certainly that type of R&D qualifies, but it's much broader than that. 70% of the companies claiming the R&D credit here in the U.S. are manufacturing companies. So lots of things around product development, manufacturing process improvements can qualify. And it goes beyond that. Software development is another big area that qualifies. So software companies, as well as other companies developing software, can certainly benefit for this credit. So the types of things that we look at covers a broad range.
Okay, so the R&D tax credit had recently been expanded to help small to medium-sized businesses receive more benefit. Can you explain these changes?
Absolutely, and there's a couple of changes that have a fairly major impact on small to medium-sized businesses. So the first one is, and to kind of set the stage, I guess, before I dive into it, historically, small to medium-sized businesses are traditionally structured as pass-through entities, so partnerships or S-corps, where the ultimate tax is paid at the individual level for the owner. We often find that these types of owners are paying what we call alternative minimum tax, or AMT. In the past, you've not been able to use the R&D credit to offset this AMT. So you have certain companies that are generating a fairly big R&D credit, but haven't been able to actually utilize that credit because of this AMT limitation. Starting in 2016, you can now use the credit to offset AMT if you're classified as an eligible small business. And I won't get into all the weeds of how that works, but at a high level, any companies with less than $50 million in annual gross receipts or sales are classified as an eligible small business and can now use the credit to offset AMT. So it has a fairly big impact on these pass-through entities to be able to now take advantage of the credit. The other major effect that is targeted at small startup companies also takes effect in 2016. If you think of your traditional startup company, they're not paying AMT, they're not paying regular tax, they're not paying any income tax. And this provision allows startup companies to use the credit to offset payroll taxes. So even if they're not profitable, as long as they have employees, these startup companies can use the credit to offset the payroll tax filings. And that's a big benefit for companies that really need the cash infusion to help get them through the first few years of existence.
Is there a rough range of the size of benefit that a client might receive by taking advantage of the R&D tax credit?
A general range would be for the federal credit. Of all of the eligible expenses that we can identify, the tax credit is usually between 5 to 8% of the expenses that qualify. So, and this is a dollar for dollar tax credit. So if you have $100,000 of expenses, your tax credit that can directly offset tax might range from $5,000 to $8,000. I should also note that many states, if not most states, have R&D tax credits as well, and the state credit can sometimes be even more beneficial than the federal credit. So the benefit can really start to add up if you're in a state that offers a state credit as well.
So it really makes sense. If you have some of these qualifying activities, you should be taking advantage of the R&D tax credit. We've been hearing a lot about tax reform lately. What impact does tax reform have on the R&D tax credit and related incentives?
Great question. First off, a lot of the talk around tax reform was getting rid of many of the targeted deductions and credits in favor of an overall lower tax rates. So the big news in the R&D credit world is that the R&D credit was retained as part of tax reform, and it's a permanent part of the tax code. So there's no expiration for the R&D credit. So while there was no direct impact on the credit, the changes that were made by tax reform have an indirect impact on the credit, and mostly in a favorable manner. For example, with the tax rates going down, it raises the net benefit of the credit. And what I mean by that is the tax credit that you identify is added back to your income. And since the income is now taxed at a lower rate, the effective benefit of the credit goes up quite a bit. I'll throw out just a simple example. So if you had a company that had that same $100,000 of expenses I used in my earlier example, in certain situations, if they're a C corporation, we would expect their credit to be $6,500, their net credit, their net benefit. As a result of tax reform, that net benefit can go up for that same dollar spend on R&D can go up to $7,900 instead of $6,500. So we have a 21.5% increase in the net benefit of the credit as a result of the rate reduction. Other things that were enacted as part of tax reform can also help make the credit more valuable. For example, we talked about AMT earlier. Corporate AMT was repealed altogether as part of tax reform. So even if you're not an eligible small business, you can now use the credit to offset regular tax since AMT no longer comes into play. Finally, other rules were implemented around the use of net operating losses, and the R&D credit can now fill the gap, if you will, meaning some limitations were implemented as part of tax reform that do not allow companies to fully offset their taxable income by net operating losses that are carrying forward from 2018 or later. And now the R&D credit can help offset some of the gap there. So there's, again, not getting too far into the details, but several of these changes will increase the benefit of R&D incentives.
It sounds like a great opportunity to take advantage of. If folks think they may qualify for the R&D tax credit, does our team offer a review or a feasibility study or anything like that to say, yep, you might qualify?
Yes, we do. And really the best place to start is by having just an introductory phone call. No cost, of course, but just to get on the phone for 30 minutes, talk through the types of activities that you're conducting, and start to figure out if there's enough activities, enough expenses to go after. So that initial feasibility analysis and discussion is really the first step.
Perfection. Thank you so much for sharing your expertise, Joe, and for everyone else for listening in. Please visit eidebailey.com or contact Joe Stoddard directly with questions or comments about this session. If you have a topic you'd like us to discuss during a future recording, please email National Tax Office at eidebailey.com. We look forward to hearing from you.